It's another question time. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. Alrighty then. Question time. We actually have here from DAMIR, Demar 2020. Hi John, hi John, you say to trade $300, but if I see only one instrument actually to trade, I invest 300, but the other 9,000 are unbalanced. And every time if I trade, I use only one instrument, short SPY, for example. I guess that's what you're looking to do, right? You're looking to short the SPY. Can you explain how I must adapt money management in this situation? All right, so let me explain this here. Let me explain this here, Damien. Firstly, I want to start here by saying I didn't say trade $300. I was saying if you traded $500 of a $10,000 trading account and had a 20% stop out, that would be 1% of your account. If you had a 10% stop out, that'd be 0.5% of your account. So that's the first thing. All right. Now, if I only see one instrument to actually trade, I invest 300, but the other 9,700 are imbalanced, and that is the key there. All right. That's the key. The key is this: is that when you are putting on a trade, you look at your total account balance, right? And you say, if I put this trade on, probably the worst situation that can happen to me is X, right? Or roughly I know that if I have a $500 trade, and let's say you're even just buying shares, right? And you say, okay, I'm going to set it at a 10% stop on this $500 trade. Well, that 10% stop is 0.5% of your account. And it's not about, all that money's sitting there and it's not in the market, so how could I be making money on the markets? It's all about the mindset. See, a lot of people think, well, all my money's in the account, so I'm just going to trade all that money. Now, yes, I do that, right? I do that. I don't trade all my money in my account, but I have separate strategies and separate money managements for that. But the thing is this, is that when you're trading and when you want to get good at trading, you want to be able to be in a situation where you say, okay, if this is a loss, I can see that my account is only going to be down $100, $50. So when you can say that, then you can say, right, now I can put this trade on knowing that if all hell breaks loose, I can get out of this, or I can be out of this trade pretty quickly, most of the time, and still be okay. It's all about the mindset, right? It's all about the mindset. So you want to have confidence in that system, and how you have confidence in that system is knowing that if the worst case scenario happens, that you're still going to be okay. So you're doing that, and when you take that trade, and just say, for example, put on a $500 trade, and that was a 50% profit, just say, as an example, it's a 50% profit. Well, now you actually have a obviously $250 profit on your overall $10,000 trading account. It's not all about saying, well, John, all my money is there, and if I'm only trading one instrument, then what do I do? That's exactly what you do. Because remember, you don't know which trade is going to make you money. So you must just keep taking that. If it's $300 you want to trade and you've got a $10,000 trading account, just keep taking the $300 trades, but with at least a 2-to-1 risk to reward ratio, a two profit to a one risk. And if you're trading those things, that's basically what you want to do. And you want to be taking the trades all the time. So even if you are only trading one instrument, And I did this when I was trading the E-mini S&P 500. I was very heavily trading that. And I was only trading that. Sometimes I go over to the wheat and the Nasdaq and stuff like that. But most of the time I was just trading the E-mini S&P 500. And I would stick to a 5% trade. And 5% of my account went on every single trade I did. Right? Because you got to think about it this, Damian, is that yes, you're only taking one trade at a time if that's the case. But if you're short-term trading through there, you're getting and getting out, you could place a couple of hundred trades a year if that's what you're doing. Do you know what I mean? But you always want to be in a situation where you know that your wins are not hurting you, your wins are not exciting you, and the losses are not hurting you. So all in all, you want to be able to make sure that you stick to a good money management, because as I said before, you don't know which trade is going to give you that whack. Heck, the very first trade you take could give you that whack. And you could lose 50%. And then the next trade you lose 5%. Do you know what I'm saying? Especially when you're trading options. So my average is about a 20% loss, and average win is about 60% win for my shorter term trades, that is. That means I'm in and out within a couple of weeks max. And you want to keep doing that, and you want to keep moving forward you want to keep making sure that when you are trading that, it's all like, okay, cool. If I get out of this trade, I started with a $10,000 bank account, and now I'm at $9,900. You're not feeling too bad, right? You're not feeling bad at all. That's the feeling that you want to have. That if the trade doesn't go well, that you can get out and your account's not damaged too much. Then get back into the next trade, and then guess what? You made $200. Now your account is at $10,100. And then you take the next trade. You make I don't know, if you're trading $500 and you make 50% return on that one. Now your account's at $10,350. Oh, look, the next one's a loss. Oh, now your account's at $10,100 or $10,150. Do you see where I'm going with that? And that's what happens, right? But then you keep edging up, and sometimes you'll go to 2 or 3 or 4 or 5 wins in a row, and then that's what you see. Now, what's going to happen is also, as you get better at trading, you can ride those trades up more and more and more and more. And what I mean by that is that your ability to be comfortable with it pulling back, you being comfortable with being in the trade longer, which is giving you more risk because you don't know, because it could turn against you. That also gives you the potential for more profit as well too. Now you've got to have good sort of money management, good sort of trade management around that. But even if you're trading one strategy, one market, that's all you want to do. Right? Now what I'm saying is that if your trading system says I'm going to go short the SPY and I'm going to be in it for a year, well then you need to look at what you're doing, because again, you just don't know which trade is going to take you. And if you're trading the market, if you actually trade the market, I mean, you're getting and getting out, even like once a month or even once every couple of weeks. If you're looking to trade the market, then you definitely want to stick to that, because again, it's important for you to understand you don't know which trade is going to go against you. And Murphy's Law simply states, if you put, and most people, what I said in the video by answering this question, I said, a lot of people say, oh, here's a $10,000 trading account, and I'm going to put on 50% on this absolutely brilliant trade, and they get whacked 50% overnight. Now their account is down 25% overnight. You don't want that. You want the small losses. And it's all about one thing I've realized is that when I focus so much on making money in the markets, I actually end up losing money. When I focus on protecting myself, I end up making a lot of money. So you see what I'm saying there? So when I focus on the profit, the losses take care of my account, if you know what I mean. When I focus on the loss, mean protecting myself. So okay, if this goes wrong, what could I get out of it for? Okay, if I average, I'll be out of it for $100. Okay, that's around about 1% of my account. Okay, then cool. I'm okay with that. So once I take care of that loss, as in like, what's the worst thing that can happen to me, or if this goes against me, what's my average loss going to be? And then that, then guess what? Then you can be in a situation where you can start to have a 3, 4, 5 to 1 profit target. Then you'll stop. And if you're having a 4 profit to 1 stop, and you're 40% right, 30% right, you're going to make money. So do you see how, and this is how I've learned to trade overall. And as a retail investor, I'm not talking about like a billionaire hedge fund trader. I'm talking about a retail I'm talking about a person who at the end of the year, I see my account grow because of the fundamentals and the technicals and everything I put in, or the way that I trade the market. Does it make sense? So I hope this really, really, really helps you out. If you like this, give it a thumbs up. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course. And I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.